Hi guys, I'm Dr. James Fox and I'm the UK's top ranked independent stock picker. After a lot of volatility in tech stocks over the past week, I thought today might be a good opportunity to take stock and take a closer look at one of the most important trends in global markets, that's silicon chip. Now remember, this isn't financial advice, but simply a reflection on the way I look at market opportunities. Always do your own research and remember when investing, your capital is at risk. Now, rather conventionally, Nvidia and Alphabet are among the largest stocks in my portfolio. And those of you watching the market may have noticed that Alphabet stocks surged over the past week, while Nvidia showed some weakness. These moves were in part connected. So let's explore why. We all know that Nvidia is central to this artificial intelligence revolution. It primarily makes GPUs. These are the general purpose silicon chips that have enabled the training and deployment of large language models by processing vast amounts of data in parallel. It has dominated the silicon market with technological supremacy, and because these GPUs have been well suited to training and inference, but especially training. This essentially means learning from patterns and data. Inference, however, doesn't need as much compute power. It can be undertaken on less powerful chips designed for more specific tasks. And this is important because inference is where end users of AI, like me and you, find value. So if AI is going to become more relevant, inference is key. This is where custom ASICs or application-specific integrated circuits come in. Most of the major hyperscalers make their own ASICs with the help of companies like Broadcom, but they're not typically sold to the wider market. After all, they're made for quite specific purposes. However, reports of a potential deal that would see Alphabet sell its ASICs called TPUs to Meta have got the market talking, precisely because this would break the convention that such bespoke chips are designed exclusively for in-house use rather than for external commercial sale. Unsurprisingly, the reports pushed Alphabet stock higher and Nvidia stock lower. So, is this the start of a broader trend? Quite probably. Many analysts see the ASIC market growing faster than the GPU market in the coming years. This doesn't mean Nvidia is going to become obsolete, however. It remains central to the AI revolution, and its sales forecast, ex China, is incredibly strong. And for what it's worth, I actually believe Nvidia stock is looking pretty cheap right now. Snapshot metrics such as the PEG ratio at 1.04 and the share price target, which is 42% above the current share price, both suggest that the market may still be underestimating the scale and durability of Nvidia's growth trajectory. Alphabet, on the other hand, is looking more expensive, trading above the share price target and with a PEG ratio of 1.92. But there's a lot to unpack here. It's a heavily diversified tech stock.